So good morning, everybody. It is what 6:33, 6:32 on Wall Street. 3 hours before the session gets going. Right. It's time to get your quant box on. Let's dive in and uncover the best fundamental opportunities across the global markets. My name is Wayne. Yes, I'm a trader. I love trading. I'm a trend trader. But how do I figure out what my trend is? Quantitative analysis of macroeconomics and then comparing two asset classes together. So, yes, I went to Harvard, got an education in economics to help me do that. Also, the founder of QuantBox, and I got some amazing things in the pipeline for you. So, anyways, hey, why don't you swing by quantbox.co and take a trial for $8? Like, everyone here already has it. No. I'm speaking to the people at YouTube. They're watching the delayed version that's hours and hours and hours old. But maybe it'll entice them to come look at our pretty colors. So, anyways, hey, YouTubers, come do a test drive, huh? Less than $8. With that being said, everybody, let's get on with it. Let's get our macro on. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. So let's check the date. The last video was 6:31 a.m. Wednesday, so it must be Thursday, the 29th of June. Getting pretty close to Canada Day, the most exciting day of the year. The party starts in Canada and then works its way to the United States and then it works its way to France. It's just one nonstop party of liberty and freedom, everybody. So let's get on with today's live event. Let me log into the cloud. A lot of interesting things seem to be happening in the markets. We're trying to identify, are the tops tops and our bottoms bottoms? Well, we'll find out. Bitcoin's trying to stage, right, a comeback. Everything else you can see is somewhere between +5 and -5%. So my first thought is, okay, yeah, some things have hit certain interesting prices and some things have made certain interesting moves. But ultimately, not a lot has actually happened. We might, we might overdo things. We might, right? There could be a bit of an exaggeration going on, but nonetheless, take a look at here. Going back to June, the beginning of June here, we had lots of up and up and up in all the stock markets around the world. And then around the 19th and 20th, those stock markets started contract. And then a little bit of up has returned again. This is a risk on, risk off gauge, isn't it? Okay. Notice that they seem to move together, huh? Macroeconomics. Yep. So the same force. Okay. Maybe it's just gravity, anti-gravity. The same force is being applied to all these different assets, and they tend to move in tandem. That's what a trend is. If there's reason to it. If it was random and they were all over the place, S&P 500 down, but DAX was way up, and well, then there would be some sort of specific catalyst for that change, right? But in this case, macro is the global aggregate trend. And so, anyways, there's a bit of a risk on returning to the market. Fundamentally, once again, these things don't change that often, but they do change. I swear it was just yesterday we had a couple of strong sells and now there's only one. Interesting. But look at Aussie, sell, Aussie, sell, Aussie, sell. Maybe Aussie's weak, huh? Take a look at the scatter plot. Get rid of that Bitcoin so we can get a closer look. And this is all over the map. So the first thing you could probably think of is, all right, probably not great um, trading conditions. I think great trading conditions would look like this. You would look at the average price of all these dots and you come up with something that looks like that. That would be great. It kind of looks like this, doesn't it? Right? So now your mean price is a curve like this. And what does it mean? Half of them are working, half of them are not working. Eh, all right. Okay. So you're like, okay, be cautious. Now, the next thing is what is working? Okay. Well, Aussie is up, Aussie is up, Aussie is up. Kiwi is up, Kiwi is up, Kiwi is up. And when it's in the top left hand corner, what it means is they're all up, but they have a negative score. So these might be sell trades later today, later in the week, next month, or something fundamentally has changed, but it will take a while to confirm that. This is just overnight price action. So you could think of like, what if they were in a serious downtrend and they were up today or tomorrow, and then next week they're probably likely to do that again, right? Any of these Aussie pairs, right? Odd versus XXX, right? So that might be the next trade. There might not be a trade today, but you can look at these as out of position. Look at this, Aussie better than pound. Once again, outlier. So you could so we could just say, well, what if we were just looking at those Aussie pairs? You'd get something like that, which means just Aussie is out of position trend wise. But what is working? Aussie, or sorry, Aussie yen, which is good. Kiwi yen, pound yen, Swissy yen, euro yen, pound Swissy, euro Swissy. Okay. CAD yen, USD yen underperforming. So there's something going on. Yen must be weak. Canadian dollar must be weak. Oh, we're learning quite a bit here. Aussie strong today, but shouldn't be. CAD and USD is weak relative to some of these others. But couldn't we agree that at the very least, the yen pairs should still be generally long? These are slightly down 0.1%. So they're break even. And these are all up slightly. This is why you want to actually look at the axes and say, all right, they're up, but dude, they're not way up. They're not 2%, right? You want to see way up, then you put that crypto back. And okay, that's what 1% looks like. You're like, whoa, wait, 1% is hardly anything. Yeah. So therefore, could be a snooze fest, right? Let me do this. Let's just look at the commodities only. All right. So gold down today, oil up slightly today. Risk on, risk off, or big question mark? Probably big question mark right now. And that's only overnight price action. It may, we don't know if the trends have changed, but probably not. And that's where technical analysis comes in, right? And there we go. Let me kick this open. Boo. What's going on? Tankan survey. All right. Mm-mm-mm. Wait, that's 3 days out. 3 days out. 3 days out. Nothing coming up. Is that right? This calendar's been finicky. I have to figure it out. Time to event. All right. See, it's going to tell me 8 hours and then 7 days. It makes no sense. All right. So Bostic is speaking today. Okay. What if I click this the other way? All right. This stuff has happened. So this is where you get the historic numbers. So, anyways, Boo, 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 boo. There we go. Here's some of the information. 12 hours, 11 hours. All right, I'm going to have to yell at the developers. So it doesn't say much for us. So low power, so tomorrow this time, is that right? Is that even right? 12 hours. So 13 hours from now, unemployment rate out of Japan. Wait, 12 hours. Yeah. So what is it now? 6:30. Yeah, 7. Yeah. Okay. That makes sense. Yeah. Tonight. Unemployment rate out of Japan. Yeah, watch that video I posted on FX Bootcamp. To see Uade, for example, is really interesting. See how he fits in the new crew of central bankers around the world. So, anyways, I'm gonna have to yell at some developers. Good, that's good. That always makes me happy. Yep. Wake up, have some Cheerios, and then yell at a developer. Cool. Ba-ba-ba-ba. Boop, 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 boop. Ooh, I've turned some of these on. Ooh. All right. So, anyways, let's take a look at some of those yen pairs then. Just yesterday, I think it was, we were burning through yen pairs, and this said sell, and I noticed it was wrong. So I fixed it. Just so you know, I noticed it. I'm like, wait, because it said sell, and then it had a positive score. I'm like, wait a minute. And what it was doing, the developer just clicked the wrong button or something. So the team had it showing the bias for a different currency pair. And I had to look into the code, and I'm like, uh-oh. So anyways, so that's fixed now permanently, right? So anyways, so that's really good. And then it's turned to a stronger buy today because remember, it said sell yesterday, and I'm like, that doesn't seem right. So I fixed it, and then it said buy, but now it's a stronger buy. So things got even better overnight. So it has changed. Okay. So, anyways, those are the pretty colors. If you want it in English, the words are here. The words, just say the words. The words are there. A nice little trend going on and stuff like that. And retail still heavily short. Okay. Check this out. Institutional investors, 73% are long euro and 81% are short the yen. So we were talking about synthetic trades here or boot camp or somewhere recently. Somewhere we were just talking about this. That's how you want to look at it, where you take this combination, you're like, dude, everybody's long this pair. So, anyways, that's how that's going. A little bit of news coming up here. Okay, this calendar works better than the other calendar. Maybe I can copy and paste it. But look at now, it's just trying to sort European news. And you can see in 22 minutes, we got a little bit of news coming out here. Some business confidence, very cools, right? German inflation coming out, very cool. So that's all coming up very, very shortly. Now, Aussie's been struggling, and it's a soft buy. Okay. 86% of retail traders are short. Wow. And then remember what percentage were institutional investors long euro? It was like 81% or something like that, right? Like 80 something. 32% of institutional investors are long Aussie. Yeah, but you know what? But maybe they'll buy it up now that it's cheap. Maybe it's time. I don't know. But it's come off hard recently, and that had to do with like no real stimulus package coming out of China, is what the word on the street is. But maybe things change. We don't know, but we know it's not. Now, we do know money has moved into Aussie as of late. Okay, cool. Uh, which reminds me, I receive feedback by the way I think you look at this page and the way we've discussed this page, and I think it needs some clarity. So maybe sometime very soon, there's going to be a new version of this that'll be easier for you to read the change in positioning. And that's pretty much what we need to see, right? Do we really care about some institutional position last week, or do we care about the change in the positioning over time? Yeah. Are we adding bulls or are we losing bulls? Are we adding bears or are we losing bears? And so, I don't know. Maybe something cool is coming. Maybe, maybe very soon. So thank you for your feedback. Take a look at maybe here's a I was in this trade and then you see it underperformed today, and because it was a newer trade, I got out, so I got knocked out for break even or whatever. But I might try again. It's a soft buy, so maybe I should have paid attention to that. 92% of retail investors are short this, and it's going up. It's like, right? Right? It's staggering, isn't it? So a lot of people say, "Well, Wayne, where do you get that? Where do you get that information?" And that information comes from here. This is the Commitment of Traders report, and so you can take all these positions that we're gathering. We also know all the positions on the exchange, and then you take the hedging positions out of the total positions. Then you take the speculative positions out of the total positions, and then there are still positions, but you can't see them. They're not assigned to anybody. You don't know who has them. They're just not hedgers, right? They're not institutional hedgers, and they're not institutional speculators. So that's retail. And so then you get then you create a page like this where you can figure out, okay, here's the institutional data, but if you extrapolate it mathematically and then put it together synthetically, you get these positions for pairs. And for some reason, everybody's short the ends. Okay, sucks to be retail apparently. Okay, and they're heavily positioned long Aussie CAD, so that's working today, but maybe not for a while. Heavily long Kiwi CAD, heavily long Aussie Swissy. So that might be working today. So let's actually expand upon that a little bit. Let me go to the cross pairs and let me look at Aussie Swissy. And it's up today, I believe, if I remember correctly. But maybe we should look to sell it, right? 92% are long. And look, it's just, in fact, it's interesting. Um, Institutional is not interested at all. In fact, so maybe I'll still back away. Nobody's interested in this except retail. That's kind of interesting, right? Institution is well, they're short Aussie and they're more short yen, Swissy. So that's not even a great trade. What was another one on there? Aussie CAD. Let's try better institutional positioning. No, no. Well, let's say we want to sell Aussie. Okay, that's fine, but they want to sell CAD too. So maybe to make the speed this up a little, instead of going one by one, let's go here and Aussie CAD, Aussie CAD. Aussie Euro CAD long. Yeah, well, you know what? I don't like cross pairs, so it's so funny. I'm trying to find something I want to show you, and then I'm like, yeah, I wouldn't do any of this. But so it's art. Like it's just not something I would do. So let's just go back to the yen pairs. Yay! Let's go to the yen pair. Well, looking at this technically, this is the overnight action. Pigs getting crushed, right? Wowzer. Wowzer. Just crushed. Let's put this into a longer term prospect. or I mean, a longer term point of view, and see where we are on that. Okay, 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 okay. All right. See, nothing has radically changed. Okay, but let's go back short term. Put that into context. Now push this down into now. Okay, it's giving back a bit. Hour. Okay, we have the same time congruency. Aussie is still quite weak, even though we have this pop. Do you want to buy that? Not yet. We'd need some technical analysis here to explain why it's suddenly going up, or we'd need a fundamental reason for why it's suddenly going up. Otherwise, it's just a mirage. If a bunch of bears took profit, don't worry about it. They'll sell again later, probably as soon as you buy it. So you don't want to buy it because it's going up. That's a fool's errand. So if it's going up, like I'm trying to show you with QuantBox, they're all up today. Great. Let's look to sell them today, tomorrow, next week, next month, or not. But I don't care that they're going up. To me, it's irrelevant. Okay, it's a timing of when we want to get short or let the trend change. Anyway, so we'll keep an eye on the Aussie, but it doesn't seem to be that big deal. Euro is stabilizing. Okay, dollar is struggling, huh? It's strong, then it's not strong. Yen has been weak, but the last couple of days has stalled out. So you have to ask yourself, what has anything fundamentally changed? And maybe going into a new half of the year, a new quarter, right? Third quarter coming up or second half coming up. Maybe that's it. Maybe it's because we're going into summer, so we're losing some of this trend volume and volatility. Maybe it was the meeting, the central bank meetings over the last couple of days. Not the central bank's meeting, but central bankers meeting in Spain. Um, Jay Powell spoke this morning in Spain and said, so he flew from Portugal to Spain, and then he did some interview or conference or something there, and said, yeah, we'll probably raise more than two. Oh, okay. Could that could that do things? Yeah. That should create dollar strength, however. So maybe that's what shows up later today as America reads the headline, right? So, anyways, we might want to look at that. Just quickly go through the market, just very, very quickly. Yeah, gold's still down. Great. It's doing fine. Bitcoin trying to get through, but it's not there yet. S&P 500 had a red day, but not a lower low day. Okay, now let's go to those yen pairs. Okay, red day, but not a down day, not even a lower low. So maybe it's coming, but that might be a bigger buy next week. CAD was a little weak today, still in that, got my jam stopped. We are bending that 21. That means the MACD is now pointing down. And it's a caution flag. You're like, Wayne, what MACD? I don't see no MACD. Okay, cool. Dang it. All right, I'll give you a MACD. Look, see the MACD pointing down. Hey, it's nice to be able to do the math, huh? With your mind, huh? Don't play your Jedi mind tricks on me, boy. Huh? Yeah. All right. Aussie, this is the one that just happens to be strong today. And my point here is when you see a setup like this, does it make you want to buy it? Hey, remember that book you bought on Amazon on how to get rich as a forex trader? And they're like, when you see this pattern, buy it. Yeah. No. It's a bit confusing. So it's going up now. Sure. I'm not interested. Pass. But I'm not. The yen weakness isn't a problem, but that Aussie, it could just be a mirage. USD yen. Obviously, this is a good one, and we've been watching this for days, and it's just slowly but surely heading up. Very much a bull trend. I'm missing data, obviously, because I'm trying to find the end of the trend. I'm not in, you know, you don't have to be a rocket surgeon to see that this is up. So when will it stop being up? And now I present information where, hey, you know what? This is also a level of caution. Bulls are supposed to be culling the herd, taking some profit. Doesn't mean it's not an uptrend anymore, but this is a profit taking zone. So as we approach 145, I think we're going to have um, less and less bulls. And so again, one way to measure that is to add a MACD if you want to do that. Okay, and they're just starting to exit, right? They have bulls haven't taken profits since. Let me change it again. Uh, Bulls have not taken profit since they hit this. Remember, MACD fell and then it rose back up, and now we're in a point where they might be taking profit. Weekly R1, monthly target. Okay, so don't be shocked if there is going to be a short term contraction in the yen pairs. Okay, euro. Okay, I think I can move my stop, lock in some more profit. Great. Once again, because there's vulnerability. If there's vulnerability on other pairs, there's vulnerability on this pair. Got to get above that for the next move. Swissy, this is when I got knocked out of break even. You can see it just didn't go anywhere. Okay, so okay, interesting. And so we saw that on the scatter plot. And yeah, we're waiting to see if this line in the sand is going to hold and perform like another shoulder on essentially a head and shoulders. Okay. So again, if you're going to be trading US dollar today, I think you should be watching, oops, not this one. Global stock markets in particular in the morning. Okay. And up means dollar weakness, yen weakness, down means dollar strength, yen strength. And like I said, a lot of these assets are at technical levels in which you would take profit. Now, that's not quantitative analysis of macroeconomics. If you're in a profit zone, it doesn't change anything fundamentally. But it's a timing issue, isn't it? You take profit, and if you and others take profit, the market will fall, even if nobody's selling. Well, mechanically, let's say, bulls are selling, which is perfectly okay. Okay, bulls are selling the positions they already bought. It doesn't mean bears are selling, and then so it fades down, and you might see things like these big fat central pivot points below us. Okay, so it fades down, but no, bears are not selling, bulls are selling, and then they will buy them back because nothing has fundamentally changed. The one thing that will probably change is the seasonality. So go through your QuantBox seasonality and try to line them up. Okay, just be aware that this week and next week are key weeks in the 12-month period in which we exist as traders. All right. Canada Day is important. Remember, set your calendars. Everything can change. Okay. Cool. Peace on earth. May the pips be with you. May your profits be above average. I'll see you when I see you. Thanks for being a subscriber to QuantBox.